This section focuses on how a firm can control its expenditure cycle with the main goal of minimizing expenses in order to achieve and maximize its wealth. There are 6 suggested control activities that are needed to be managed in order to control the expenditure cycle. First is the transactions authorization, then segregation of duties, supervision, accounting records, access, then independent verification. And these 6 control activities are applied in the 2 systems that are used by the firm to administer its purchasing, ordering, and payment of inventories. Such 2 systems are the purchases processing system and the cash disbursement system. To refresh your memory, purchasing system has something to do with the process of buying products and services, covering purchase requisition and purchase order through product receipts and payments. In short, it is the key for an effective inventory management of a firm because it helps in determining what to buy, how much to buy, and when to buy. Yes, if you can remember, EOQ applies here. On the other hand, cash disbursement system, obviously from the word itself, cash disbursement, such a system has something to do with handling a firm's cash outs or payments. And accounts payable or AP function is closely tied with such cash disbursement function as most are processed through AP when payments are made. So let's start with transaction authorization. Focusing on purchases subsystem or processing system, first, in order to apply transaction authorization, inventory control is a must, as such function continually monitors inventory levels, formally authorizing replenishment through purchase requisition. Without such formalizing authorization process, purchasing of inventories may result to overstock or out of stock as purchasing agents may pursue their own discretion, which such discretion may involve own interests. As a result, excessive inventories tie up the organization's cash reserves and stockouts cause loss of sales and manufacturing delays. While under cash disbursement system, no easy or direct payment will be done, like after purchasing payment will be done at the same time it was purchased. In her AP function authorizes payment via cash disbursement voucher. To make this effective, checks will not be written without explicit authorization, such as providing voucher numbers serving as proof for verifying authenticity of checks written. Now let's go to segregation of duties. Applying such control activity to purchase, says processing system, it is best to segregate inventory control from the warehouse or from purchasing and inventory custody. As inventory control keeps the detailed records of the asset while the warehouse has custody, reconciling records to the physical count of inventory in the warehouse makes it efficient to know if what has been originally ordered was received in full and the number of sold inventory with the number of inventory reduced in the warehouse. So if such duties are not segregated, it would be easier for an agent of the firm to commit theft and just record the remaining inventories compared to the number of originally ordered by the firm. Okay, then while under cash disbursement system, it is best to segregate general ledger and accounts payable from cash disbursement functions. As asset involved in the cash disbursement subsystem itself is the literal cash, such asset is controlled by the AP subsidiary ledger and the cash account in the general ledger. Meaning to say, cash disbursement itself depends on how much is recorded in the AP subsidiary ledger and in effect affect the amount of cash recorded in the cash account in the general ledger. So basically, if these functions, the writing checks, posting to the cash account, and maintaining AP are not segregated, an individual who has such combined responsibilities could commit fraud against the firm. How? Through withdrawing cash personally. Then just recording that such transaction as if it was a payment for a past transaction. Now let's go to supervision. Such control activity vitally affects the receiving department as it is the area of the firm which benefits from such supervision. Under the purchases processing system, such department is the one which are responsible for inspection if what has been purchased and ordered by the firm are received in full and in the same quality expected by the firm before such are directed to the warehouse. In here, close supervision is recommended in order to reduce two types of exposure, and which is the first one is the failure to properly inspect the assets and the second one is the theft of the assets. Now, why close supervision? Because in close supervision, not all information regarding the assets received are exposed to the receiving clerks and personnel, specifically information about the quantities and the prices. In this way, they will be forced to do their job, inspecting and counting what has been received because they are oblivious of how many and how much was ordered by the firm. In this way, theft can be avoided too if proper and systematic supervision be done, especially during busy and hectic periods, as incoming inventories are most exposed in those times. By this, they cannot commit fraudulent activities and just slack off or else such would affect their position in the firm. Now, let's go to the accounting records. Basically, the control objective of this activity is to maintain an audit course adequate for tracing transaction through source documents to the financial statements. Such documents will serve as evidence of purchase transactions which were unrecorded and will validate materially understated or overstated financial records. By means of this, intentionally misstating financial information will be avoided. Now, let's go to access. Limitation of accessing to assets to secure its value and longevity in terms of assets until sold, and accessing to records to secure its confidentiality is a good way of properly controlling firms' expenditure cycle. Through direct access, it involves access to physical assets, especially cash and inventory. So in order to safeguard them against illegal and fraudulent matters like theft, locks, alarms, and restrictions unless authorized can be done. However, there are instances where bribery happens, and this calls for a tighter security. While through indirect access, it involves accessing to documents that control its physical assets. Limiting access to authorized person may help to avoid constructing fraudulent purchase transaction. And such limitation must be done properly in order to avoid deceitful actions like taking advantage of proper supporting documents just to make an act look legitimate in the firm system, making it easier for a person to cash out. Now the last one is the independent verification. Verifying transactions, especially those recorded in the purchases processing system, is a must. With the help of AP function, through tracing source documents containing information regarding a certain transaction, it becomes easier for the firm to properly recognize whether such recorded transaction recognizable as an obligation or whether the recorded information in such transaction is legitimate and valid. So the following are three source documents that must be reconciled with each other before an AP clerk recognizes an obligation. So the first one is the purchase order, which shows the quantity of needed inventories ordered from a valid vendor. Valid vendors in a firm's term are those whom they do regular business. And such trusts are created in order to avoid fraud like manipulation of buying from a vendor whom an employee or personnel has a relationship, or buying an excessive prices from vendors in exchange of kickbacks. Such PO must reconcile with the purchase requisition requested by an employee to the purchase department. The second one is the receiving report, which is done of course by the receiving area, evidenced by the physical receipt, the condition of the received assets including its quantities. So such is reconciled with PO to signify a legitimate obligation. And the third one is the supplier's invoice, and so from the word itself, supplier, it is obviously delivered by a supplier which provides the price of the goods or inventories which was sent by them to the firm. Such information are recorded as an accounts payable. However, prices provided by the invoice must be reasonable compared with what was written in the PO. So besides what has been mentioned, independent verification must be done by the General Ledger Department in order to reconcile overall accuracy of process. Such will rely on journal vouchers and summary reports from inventory control, AP, and cash disbursement, which will be used to verify whether total obligations recorded equals the total inventories received. This is same with the total reductions in AP equals the total disbursements of cash processed by the cash disbursement system. Also, periodic bank reconciliation must be also done by the controller in order for the firm to verify transactions recorded by the firm but remained unrecorded by the bank and vice versa. Thank you.